Hello and welcome to the Federal Podcast. I am Madhu Balaji of the Federal. India stands second in crypto adoption worldwide. The 2021 Global Crypto Adoption Index by blockchain data platform Chainalysis has revealed that crypto adoption increased by more than 881% in the past year. I have with me Mr. Praveen Kumar, founder and CEO of Belfrics Group, to talk on crypto adoption in India. Hello, sir. Could you please tell us how the crypto market boomed during this time of COVID crisis? How has the crypto market been in India till this time?
Even though operating a crypto exchange in India is a challenge owing to regulatory uncertainty and a lack of banking support, the adoption rate of crypto in India has accelerated considerably during the pandemic period. Young Indians, more or less, they do not have much affinity to physical gold investment as against the older generation. Also, the volatility of crypto markets and the ease of getting access to investing in global instruments aided the adoption rate among Indians with age group of around 20 to 35. In addition, there has been a capital control for overseas remittances, right? So many of the global investment instruments were not available to an average Indian investor. But when cryptocurrency came in and when they were easily accessible through P2P market and through crypto exchanges, they were able to invest in these global technologies with ease. So as and when regulators gives a clarity on digital currency classification, and also when the regulation comes into effect, we should expect a much bigger hike in digital currency adoption in India.
What is the difference between on chain and off chain transactions? The 2021 Global Crypto Adoption Index suggests that individuals prefer online transactions. Why is that, sir?
The survey must have been conducted among tech community because most of the individuals, they do not understand the difference between off-chain transaction and on-chain transaction. On-chain transactions are considered to be valid when the blockchain reflects the transaction on the distributed public ledger, whereas the off-chain transaction happens securely between two parties outside the main blockchain. Let me explain this in simple terms using our Belgium blockchain app. We have deployed the certificate issuance app for several universities. So the university issues a certificate to a student, which is written on-chain on the Belgium public blockchain. It states that something has been issued to the student. So this you can refer to as the on-chain transaction. Whereas on the sidechain, all the private information pertaining to the student, which is his grades, name, details, everything is written privately. So this can be referred to as an off-chain transaction. So here, if anyone wants to view this information, the private information, it is not publicly available. So either the student or the university will have to give the permission to view this transaction. So this is the main difference between off-chain and on-chain transaction. So we cannot ascertain that one is better than the other. Yes, definitely on-chain gives more credibility and immutability, wherein which off-chain also provides a lot of benefit because it's very consistent among various networks. It's cheaper, faster, and it's also private in nature, which can be securely accessed. So there has to be a combination of both private and on-chain and off-chain transactions, which can be effectively used.
What is P2P trade volume? Could cryptos only be bought on P2P trade platforms? How does it work?
P2P volume at this point in time is quite difficult to assess as they are mostly unregulated and unorganized. The two major P2P exchanges that are currently operational, they do a volume of approximately $200 million on a monthly basis. The decentralized exchanges, which are also the peer-to-peer networks, they do an approximate volume of $800 to $100 billion on a monthly basis. Cryptos are traded both on centralized exchanges and also on P2P exchange. Both have its own pros and cons. The P2P network do not have a centralized party, similar to how a centralized exchange operates. So it's directly between peer-to-peer. So there are several methods of executing the peer-to-peer transaction. It keeps evolving. The decentralized exchanges, right from the inception, it has evolved a lot. So you will be seeing much more variations of the peer-to-peer transaction, and I assume so that one of the most major model would be a hybrid solution, wherein which the benefits of both centralized and the decentralized exchange are combined together to give the best solution that is possible.
Could you tell us about cryptocurrency valuations?
Crypto assets can be broadly classified into three categories: security tokens, utility tokens, and cryptocurrencies. If the said token is an underlying token for the blockchain, then both the token and the platform should be taken into consideration while assessing that particular token. Let's talk about security tokens. It's a fairly straightforward process, as a token represents the economic interest in the issuing business. Both the market approach and the income approach are mostly used for the security tokens, and the valuation agencies are very familiar with this particular model. But in contrast, the utility token poses several challenges for the valuation agencies. Discounted to cash flow and market approach mostly do not work for the valuation purpose for the utility tokens. This is predominantly due to the fact that the rights to the future income do not exist in many cases for the token holders. The demand for the token depends on whether the operator of the platform is extracting revenue from the operations using the tokens or the underlying platform. Let's say, for example, our Belrium blockchain, which is a KYC compliant blockchain, has a utility token named Bell. We currently have products for KYC verification, certifications for education, health, and employment, which are running on our Belrium blockchain. If our token need to be valued, an assessment need to be done on the potential number of transactions that could be generated by these businesses that are running on our blockchain. So that's how utility tokens are to be valued. Now, when it comes to cryptocurrencies such as Bitcoin, which can be fairly classified as a medium of transaction also, the valuation can be done based on a liquidity discount approach, wherein which the token is discounted based on the ease of liquidation. So these are the different methods of valuation that are currently prevalent. Most of the auditors and even venture capitals are just getting used to these new age technologies. So over a period of time, you will be able to see standard valuation process coming up for all these types of asset classes.
Why does individuals choose crypto over traditional assets like bonds, equities, and gold?
Each asset class has its pros and cons. Crypto is the newest entrant to the financial markets and has done exceedingly well than any other asset class as of now. One major difference in investing in crypto against stock is that you get to invest in the underlying technology rather than the company. The upside is exponential if the technology succeeds in getting it adopted. Another major aspect of crypto investment is that not only you earn out of the value growth, you get to stake and also to lend in the crypto markets. You are able to pay your fees and purchase your tickets using cryptos, whereas you can't do all these things using equities and bonds. So crypto provides a unique combination of utility plus investments. Now, coming to gold, in regards to investment in gold has always been an effective hedge for mainstream financial markets and will continue to remain so. You will be seeing digitized form of gold very soon, which will give a tough competition to Bitcoin. We have to wait and watch to see the effect as and when the market matures.
And what is NFT? Are they like cryptocurrencies?
Cryptos are fungible tokens and NFTs are non-fungible tokens. NFT similarities with crypto can be attributed to the fact that both are issued on the blockchain network using the similar programming methodology. However, NFTs function differently from cryptocurrencies because each NFT is unique to its value, whereas in contrast, one Bitcoin value is exactly same as another Bitcoin. Mostly art, collectibles, music, and video are converted to NFTs and are traded. Several marketplaces are already available for NFTs, and they are traded in all these marketplaces. However, the NFT space is still at its nascent stage, and you should be investing with caution in the NFT market.
Which cryptocurrency is the best buy? Also, which is the cheapest one?
Which cryptocurrency is the best buy is quite a difficult question to answer, as there are several cryptocurrencies that carry massive potential growth. Investing in cryptocurrency is definitely a high risk process. You need to do your market research prior to investing in any cryptocurrency. From an investment angle, around 40 to 50% of the weightage should be given to the top 10 cryptocurrencies that have both technological dominance and also the market adoption. Approximately around 20 percentage can be allocated to those blockchains which are fairly adopted by the market, and yet a massive potential exists. Dark horses should not be ignored because they can give you a pretty good return on investment because they have good technology that are yet to establish, and the market is yet to adopt. So you can divide your investments into these categories. Now, to answer the question of which is the cheapest one to buy, it's quite difficult to define what is cheap in cryptocurrency just based on the value. A coin that is valued at 1 cent, um, which has a supply of 1 billion, it cannot be termed as cheap. If the underlying technology and its potential is not yet understood by the market, and if you sense that the technology and the team that is promoting the technology has a clear roadmap to scale the solution and market adoption, then I would say that it can be termed as a cheap currency to buy. So you need to do your market research and the due diligence prior to investing in any cryptocurrency.
What would your advice be to the first time crypto buyer? What are the risks pertaining to crypto investments?
As a first-time investor, my suggestion would be that prior to investing in cryptocurrency, try to query why the cryptocurrencies are used and what issues they solve. This will give a fair reasoning for you to justify whether to invest in this technology or not. There are several risk factors associated with the cryptocurrency investments. The projects could become obsolete in some time because blockchain technology is very much open source and new technology evolves on a daily basis. This could easily displace the existing player also, so you need to take that into consideration. Lack of liquidity and regulatory compliance are some risk factors that you need to assess prior to choosing a coin, because even though the project is really good, and if that is not going to comply with the regulatory requirements, that could face roadblocks at some point or the other. So that's one factor which you need to consider. And also the liquidity. Let's say, for example, if the token is gradually not increasing in liquidity, you might face difficulty in offloading that particular coin when you want to sell. So all these factors need to be taken into consideration. Also, the price will remain highly volatile in the foreseeable future, and hence investment in the cryptocurrency market should be made based on your risk appetite. Having said that, the potential of return on investment is massively high. You should be having a vision of around 5 to 7 years while stepping into the crypto market, as a long-term approach could fetch you return that could far exceed investments in any other asset class. So you always should have a long-term approach while stepping into the cryptocurrency market.
What is your opinion on CBDC, that is central bank digital currency? If launched, how will it perform in the market?
CBDCs are going to be a reality in the near future. It's not Bitcoin or Ethereum that will disrupt the banking industry. It's going to be CBDCs that will change the way in which how the bank will perform. Grassroots level financial inclusion and cashless economy will be some of the key advantages of CBDCs. In addition to 1:1 pegged national currencies, we might also witness CBDCs with basket of underlying assets. You also will be seeing several new trading pairs that will dominate the trading volume in the crypto asset class in the years to come. CBDCs actually will establish crypto as a legit asset class, and this will attract the institutions that are currently standing on the other side of the fence and watching the industry. So that's going to be one of the biggest impact of the launch of CBDC.
Thank you. The 2021 Global Crypto Adoption Index analyzed 154 countries, surveying 47,000 users worldwide. It found that Bitcoin is the most popular crypto in India. Thank you.